This is the Daily Market Rundown live from the Tradelo Trading floor. It's October the 29th and some highlights from today's show. Global growth is slowing fast. Google is in focus and Bitcoin is exploding higher towards record highs. Good day, traders. Welcome. Another a very exciting day. We've obviously got a number of different macroeconomic events over the next couple of sessions. So let's dive straight in with some overnight news. In focus are two very interesting headlines. One from McDonald's. We all know the famous company. And it matters not necessarily because it drives any of the macroeconomic markets, but it's interesting because it touches pretty much every part of the globe. McDonald's is everywhere, so it's a fantastic proxy in general of consumer demand and just the health of the consumer in general. Keep in mind, of course, McDonald's is very much geared towards perhaps the part of the population that are on generally on middle to lower incomes. So it does give us a very good insight as to their demand for a treat like McDonald's. Now, they did come out and they've told us that their global sales is down 1.5% in the third quarter, and that's the biggest drop in 4 years. Now, that's not necessarily a surprise. The purpose of pointing this out is not that it's a surprise. Of course, the stock is down around 2.5% in the pre-market. But what it does suggest to us is that there is a part of the population that is effectively slowing the demand for the likes of McDonald's. Now, accompanying that news, we also had BP report, and that again just really paints an additional part of this sort of, are we heading into a recession type picture? Because BP has come out and they've told us that their profit has dropped 30% from a year ago. Okay, now again, that's not necessarily unexpected. We all know that oil has been very, very weak, and demand for oil has been extremely weak now for 18 months. But it really does just add to this concern that we do have a consumer that has been weighed down by higher inflation as well as interest rate costs. In other words, central banks' interest rate policy has to a very large degree dampened demand. And we see that from two key bellwether companies like BP and McDonald's. We also had Ford come out and report some very, very weak numbers. And again, what does this all mean? Does it mean we head into a recession? No, of course not. But what it does tell us is that a large segment of the consumer is very, very weak. They are very, very vulnerable at this point. And we can see that in some of the big name stock companies. Now, if we go and turn our attention to another very, very interesting chart and as well as topic, it's all about the US interest rates. I'm going to show you a fantastic chart on this, but what it's starting to point towards, if we look at the volatility within particularly the MOVE index, what you're going to notice is that there is quite a bit of activity going on. There's quite a lot of hedging taking place, demand for particularly longer dated duration. Why? Well, because it's starting to point towards a clean sweep type scenario for the Republicans. Now, in summary, what does the market think a Republican win means? Well, it means stronger tariffs, of course. It means a lot more spending from the government. It means a lot more issuance of bonds. And all of that points towards a much, not just more volatile bond curve, but ultimately a higher level of inflation expectations, as well as, of course, a Fed that won't necessarily be able to cut as quick as they would like to. So that's the thinking. A Republican sweep means a more inflation environment as well as a high yield environment. For the Democrats, it's very much a case of a bit more disinflation, a higher tax ultimately on corporations, perhaps even a capital gains tax, and all of that typically means less demand and a more disinflationary type environment. And that's the general sort of consensus thinking as we go into this election. But right now, what I want to point your attention to is, what are the two curves doing? In other words, if we look at the bond curve in the orange, that's the MOVE index. Okay, what's that showing us is that since sort of really the start of October, we've really seen, bonds ignite. Okay, the volatility in bonds is now at the highest levels it's been all year. Okay, and that is on account of the market starting to get ahead of this Trump thing, starting to think that Trump's actually going to potentially take a clean sweep. Now, what does the market do on a Trump clean sweep victory? Well, yes, bonds will remain volatile, but volatility does not imply directional trade, and that's something we have to be careful of. The market will be hedged to some degree against a Trump clean sweep, so obviously on the night we are going to get quite a lot of volatility, but the big picture, and when I say big picture, I'm not talking the next week, the next month, the big picture, i.e. the next 5 to 10 years, is that an inflation or a Republican clean sweep will have longer term implications for ultimately yields in the United States. And we're not going to see that necessarily play out in 1 week, but perhaps over the next 12 to 18 to 24 months. Okay, so just keep that in mind. Whilst we're all going to get excited about a Trump clean sweep and, yields are going back to 5% on a 10-year, it doesn't do these things necessarily in a straight line. We do, of course, need to see those tariffs come into play. We do need to see their implications of those policies. And we, of course, need to see Trump put those policies in place in the first place. Okay, so a devil will be in the detail as to, when markets actually do stage those scenarios that we're going to talk about as we move into the election. Okay, now let's look at the purple line, because that's effectively the VIX. What do we notice? Well, we notice that volatility in the equity space is very dampened. In fact, it's pretty much trading flat since the beginning of October. What does that tell us? Well, it gives us a bit of insight. I think one of the key takeaways is it tells us that perhaps equities are not the thing that we want to be trading necessarily on the night of the election. It also tells us that it seems as though regardless of who comes into power, they're not so concerned about a Trump victory. And if anything, a Trump victory could be the thing that ignites these equities back into record highs. Okay, I think that's the key summary takeaway from this chart, is that the markets like a Trump. They're not scared of Trump. No one wants to hedge with this idea of a Republican sweep. And what that tells me is that the markets will move very favorably on a Trump victory. Okay? That's our key takeaway from these indices. Now, if we look at some key charts, I'll show you Bitcoin in a minute, but GOOG is very much in focus. We, of course, have got Google reporting tonight, and what I want to point your attention to is that high was pretty much made at the last time when Google disappointed the markets back in June. Okay, they told us that they've invested a lot in AI and they don't expect any kind of margin coming from that investment anytime soon. The result is the market slapped Google. If we compare Google to some of the other AI names, they are very much underperforming massively as a result of that Q2 release. So again, I think Google will be in the light today. I don't think necessarily that that the story will change around Google, but it will be very closely watched, as they are pretty much the first of the AI names to report. Okay, we do have Meta out tomorrow, so that will then obviously sort of be second after Google. Okay, keep in mind that top we made in July was also a top for the market, so we did have a quick topping out as a result of those Google earnings. So do stay focused when they release later on tonight. Now, our play of the day is very much Bitcoin. Of course, Bitcoin has now broken out of that weekly structure which we've been talking about for a while. And yesterday it did very much stage another one of these moves. We're up almost, sort of 6-7% over the last 24 hours. And it's very much alongside this theme of a Republican sweep. Now, what I expect happens as a pattern play is that Bitcoin will maintain its bid. We will start to see a bit more tweeting and to the moon type stuff going on in sort of social media land, and that's going to drive a narrative of Trump being good for Bitcoin. I think you'll start to see the retail market latch on to this today, and what I expect happens is this catches on a nice story. Bitcoin perhaps trades record highs at some point this week. I'd be very surprised if we didn't trade record highs at some point this week prior to the election actually starting. So keep a very close eye. I think this is the kind of market that is going to stage a bit of a silly move over the next 24, 48 hours. And what that does mean is we are pretty much in this flag for the last couple of hours in European session. I suspect this goes again this afternoon. And like I said, where's that record high? Somewhere around that 75,000 mark. Do we rally and accelerate through that? Yes, perhaps. I think we break to record highs. It'll just suck in a bit more, let's call it slow money, or at least money that's been slow to this idea that Trump will be positive for Bitcoin. Okay, don't forget, the whole Trump trade started around 62,000. Okay, so we're already trading a good, call it 15% above that. The market is pricing in this Republican sweep type victory. So again, just factor that in. I think this goes to record highs, and that's why it's our play of the day. There's very much still upside over the next 24 to 48 hours. Okay. That being said, let's then turn our attention. Of course, today we've got one key economic data point, that is the JOLTS number. And this is something that's not necessarily going to be a market mover. It doesn't really paint any significant importance in terms of the big picture right now, but it will be closely watched. We know JOLTS has been slowing, as it should, because we've got a very, very restrictive policy rate. I think numbers to keep in a close eye on, a significant drop, okay, where the JOLT openings to drop below 7.5 million. I think that will scare a bit of some of the bond shorts. We've seen some very aggressive bond shorts going in the market. I think I've been banging on about the idea of being long 2-year bonds here. It seems as though they are very, very oversold. So contextually, a 7.5 million JOLTS will really kind of put a bit back into the front end of the US curve. That being said, I think we could very much bottom out here. I think the theme over the last 6 weeks has been perhaps a labor market that's a little bit stronger and stickier than everyone thinks. So yeah, a number above 8.5 million on the JOLTS does start to point towards perhaps a Fed that was prematurely cutting, and perhaps a labor market that's starting to heat up. Okay. Aside from that, though, like I said, those are the outliers. We should very much come somewhere between 7.5 and 8.5. So keep an eye on that. I think it is one that's got the potential to move if it does come out as some form of an outlier. Okay. Aside from that, though, there's no real other key data until we get the Google release at the close tonight. So pay attention to that. If there are any other questions, do post them in the private chat channels. That's it for today. Good luck out there. Always manage that risk. Go make some money.